How do our elite prop traders enter and exit trades so accurately? They know the secrets to the very best entries and exits for each trade. And in this video, one of our most seasoned traders will walk you through numerous real-world examples showing you how he does it step by step. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from an S&B trader so you can grow your trading account.
Welcome back to another bar by bar breakdown. Today, we're diving into some clean intraday momentum trades from November. We'll kick things off with PLTR's back through open setup after the blowout earnings. This trade showcases one of my favorite opening drive strategies where a pullback into pre-market support sets up a powerful move through the opening price and continues higher. I'll break down the game plan, the levels I focused on, and how this type of setup plays out time and again. Next, we'll dive into Tesla's second day continuation after Trump's election win. I'll show you how price acceptance and market sentiment lined up for a clean continuation play and why pullbacks into 2-day VWAP gave us a low risk, high reward entry. After that, we'll look at DXYZ's mean reversion setup. With speculation around Musk and Trump fueling a sharp squeeze, this fund skyrocketed thanks to its SpaceX exposure. I'll walk you through how I approached this trade, from watching pre-market resistance to reject and timing a simple first bounce mean reversion entry for a second leg. Then we'll break down Tesla's day 3 breakdown, a textbook example of how to capitalize on market exhaustion after a strong multi-day rally using simple technical levels. Finally, we'll wrap up with an easy money trade in Tesla, where news of Trump's administration prioritizing self-driving development created a straightforward opportunity after Tesla failed to hold VWAP and longs were clearly trapped. I'll show you how this trade set up and why it's a perfect example of an easy money trade. By the end, you'll have a better understanding of how to spot clean opening drives after earnings, time mean reversions, and profit from both continuations and breakdown setups. So let's get started. All right, so first we're gonna dive into PLTR from earnings day on November 5th. Ever since PLTR was officially added to the S&P 500, it's been extremely strong and just grinding higher. If we zoom in a little bit to the start of October, you can see that it started to form this base here between $40 and around $45. In addition, $45 was the previous all-time high. We could zoom out and take a look at that. You can see back in 2021, $45, previous all-time high. Once PLTR reported earnings, you could see this really strong reaction right through that all-time high, and it began to consolidate. They reported blowout operating income, $275 million versus Street's estimate of $236 million, with upside driven by higher margins and better sales. What I really like to see after a strong earnings reaction like this is price acceptance, where the stock just continues to consolidate and accept those gains, and it continues to consolidate into the pre-market after it reports in the after hours. Also like to see it start to curl up higher into the open. Now, what often happens is you'll get some profit taking, and we could look at that as big money, just taking advantage of the increase in liquidity to take profit after earnings. What I like to see off the open is a pullback into a clear after hours or pre-market support. And really, I was looking at the earnings reaction high, so you could see that little bit of resistance there around 47. And I was looking at this all the way down to about 46. So you could see how I have this area highlighted. I was looking for a pullback into that area, profit taking into that area, and a strong bounce. Off the open, extreme amount of volume. You can see this indicator here down at the top left of this volume box, bottom left. What that's looking at is percent of 30-day average volume. Just from studying this, I've noticed on really strong earnings days where a stock is going to have a continuation in the direction of the earnings gap, we will see these earnings stocks do 30% of their average volume within the first couple minutes of the day. And that's another good indicator that the volume is extreme and the stock can continue in the direction of the earnings gap. I was observing this pullback. It was coming into that area of support, potential support from the earnings reaction high, right into this consolidation area. And as soon as it started to push off, I noticed that PLTR was doing 56% of its 30-day average volume in the first 6-7 minutes of the day. And that's something that also got me excited about this trade. And once we hold that $47 area, and you can see the buyer stepping in there, you can see the wicks into 47, trades into 47 and holds, gets a little bit below 47 and holds, gets a little bit below 47 and holds. There's clearly big money stepping in to buy at that level, which is the initial earnings reaction high and resistance shortly after. It's becoming support. You can see volume starts to decline, and then we get this move back through VWAP and back through the opening price, going from red to green on the day. And that's the trigger for this trade. Some people call it the down through open, the back through open, but either way, once you see that hold of that pre-market after hours resistance becoming support, and you get the strong move back through VWAP and back through the opening price, that's your trigger as soon as it trades back above the opening price. And you could see this volume, it's all done on the ask. That is the entry for me. And you could simply put a stop at lows, or you can mix it up. You could say, if price gets rejected here and we trade back below this candle, I'll stop at a half, put the rest of that at a few cents just below low of day, and you can manage the trade that way. Looking at a 2-minute, a method that worked really well was the 2-minute bar trailing stop method. The next candle opens, continuing to keep your stop at low of day, and then just trailing by prior bar lows. Stock trades above that pre-market high, rips right through there on some elevated volume. That's a great signal as well. And then you can see price begins to slow down in front of 50, and we get that prior bar low break where I took a piece of profits as that prior bar low breaks. Given that this is the first leg of the move, I'm willing to hold a piece of this position to see if we get a continuation higher. If we just zoom out and look at the 1 minute, you can see after that move towards $50, we get our first pullback into the 21 EMA, and it holds. Typically after a really strong first leg up, first trend move, if the stock is going to continue higher, it'll have a natural pullback to that 21 EMA and bounce off of it. In addition, if we go back to the 2 minute, you can see that it also pulls back to the 9 EMA there and holds. So I like that confluence there. You can see that volume comes in through high of day once again, and we start to push up a little bit. And given that at this point in the move, we were up 1 ATR from low of day. So 1 ATR in PLTR is about $3. And once we started to slow down at 1 ATR from low of day, I began to book more profits until I was stopped out of the rest of the position as we broke that trend from the low. Also broke below the 9 EMA for the first time and closed below. Now we're going to take a look at Tesla from November 7th, which was the second day of trade after the election results. And you can see that on day one, Tesla had this massive gap up and price was accepted up here. It had this dip in the morning and closed at the top 20% of its intraday range. It was able to hold that gap really, really well, and I'm looking for a continuation on day two. In addition, Tesla was definitely a main focus for me, just because there's speculation that Musk's involvement in Trump's campaign and Trump's win could lead to some favorable policies that would benefit Musk and his companies. So this was definitely a top watch for me throughout the election, into the election, and after, and it still is. Just briefly taking a look at this chart here, you can see that 290, very clear resistance, acted as resistance in the pre-market. failed from there off the open, and tested it a handful of times into the close. The second level that I wanted to look at was 2-day VWAP at 285. So we could look at 2-day VWAP after a high volume day. It's just a nice inflection point. If we trade below there, we could assume that the bears are in control from the prior day, and if we're holding above it, we could assume that the bulls, the longs from the prior day, are in control. In addition, I liked that after that dip on day one, it acted as resistance. Into the close, it acted as support. And then early in the morning on day two, it acted as support again. So the game plan going into this day was to buy a pullback into 2-day VWAP. And just for what it's worth, 2-day VWAP, it's never an exact price. It's just an area of potential support or resistance. I'm going to go over a little bit of an advanced entry and how I traded this, and you did not need to trade it this way. You could have waited for more confirmation. However, I really love this idea given how well Tesla was able to hold up on day one and how it closed at the top 20% of its intraday range on day one. So we'll talk about how I traded it, and we'll talk about a couple of more beginner-friendly ways to trade it. Off the open, we get that push into 290, proving that it is, an excellent resistance level again. We fail from there, we're below VWAP, we push into VWAP, and we have this hard failure to new lows. Also, trading into that 2-day VWAP area, about 40 cents shy of it. When I'm watching tape here, what I notice is that as it makes a new low, it gets bid right back up in 286 holds. So we're not getting follow through when Tesla trades to new lows. And that is pretty significant given that it's trading extremely high RVOL. It's day two after a massive gap up, and price can't push lower. So the next candle, I'm just observing the tape, and it holds 286 again. And then this was really interesting to me. Tesla trades below 286, and we get this strong rebid. If you haven't watched the previous bar by bar video, definitely go check that out because I talk about the significance of these wicks and what they mean to me. So as soon as I saw that move back below 286 and push right back up, this is where I initiated my long position with a simple stop just below low of day. Tesla is then able to reclaim VWAP, and we push into that 290 again. Following that move, Tesla is able to hold VWAP really, really well. You can see that it's wicking below VWAP, rebidding, and it does this for about 15 minutes. It's holding VWAP now for about 15 minutes. Then you could see this wedge pattern forming, really clear wedge pattern forming, and we're getting this curl outside of the wedge. And this is a small nuance that I've noticed over the years. When a wedge is ready to break, you'll get this choppy price action inside the wedge, and that buying pressure will start to build, causing this curl of green candles. So you can see buying pressure starting to build, we're starting to curl out of the wedge, and we break through 290 on the second highest volume bar of the day, which provides an excellent opportunity to add, or even get into an initial long position. This is just a picture perfect opening range break to the upside on the second highest volume bar of the day. In addition, like we've mentioned, above that key 290 resistance area. Don't need to get in here, can just wait for that simple opening range break. And you have the confluence, you have the high of day, acts as resistance, and that higher time frame resistance and volume confirmation. Just an excellent opening range break to the upside. Following that move, Tesla starts to slow down in front of 294, and I begin to book some profits. Now, what's interesting is similar to that PLTR trade that we just went over, after a strong first move up, first trend, we will usually get a pullback, slight natural reaction, just a natural pullback to the 21 EMA, and it's able to hold that 21 EMA. If we zoom out a little bit to the 2 minute, you can see that it also holds that 9 EMA. just a natural pullback point. And if this is going to be a true trend, this should be the start of a second leg. So we get another push up. I'm considering this the second leg of the move intraday. Starts to slow down in front of 295, and I begin to book some profits again. And then after this third leg of the move, Tesla is now starting to trade into 1 ATR from about low of day, trading towards that $300 area, and I am selling more into strength, leaving myself with 20% of a core position just because I'm in from such excellent prices, and it is breaking out above 290 resistance. And as Tesla trades into 300 and starts to break down, I'm just getting rid of that 20% and locking in profits on this trade. Makes sense that Tesla would reject from that 300 whole number area after such a strong move from the lows. All right, so now we're going to move on to DXYZ from November 11th, which was really an A+ mean reversion opportunity. DXYZ is a fund that has an investment in SpaceX. Again, everyone knows about the relationship between Musk and Trump's election victory just suggests that there could be favorable policy changes for Musk and his business, and this is just running off of that speculation. DXYZ is a fund and it has a stake in SpaceX. Makes up 37% of this fund. And you can see the squeeze. DXYZ trades from 11 to 50. In addition, we have a strong move, a close on highs, a gap, followed by another gap and a close on highs, and another gap. I'd love to see that. A series of gaps and closes on highs into a day 4 gap up starts to get me really interested in a short. So in my opinion, this goes from a potential A opportunity on day 3, and on day 4, this is really just an A+ opportunity on that gap. So we're getting that gap on day 4, and early in the pre-market, we could see this $50 area pre-market high. One of the simplest ways that an overextension to the upside can set up when you're looking for that short is a rejection from the pre-market high. That is just one of the best and easiest ways that this trade could set up. You know, I always say that these overextensions to the upside, they're a little bit hard to teach because they're very nuanced and they could set up in very different ways. But like I said, one of the simplest ways is a rejection from that pre-market high. Early in the morning, the stock will put in a pre-market high, it'll start to fade into the open, and off the open, we're looking for a push up into that pre-market high and hard failure. Some levels that I'm looking at, the opening price, $47.50, that $50 pre-market high, and this pre-market support at $44, where you can see off pre-market open, we held that 44. Around 8:30 in the morning, held that 44 again, held it again, and bounced off. So really, those are the key areas that I'm watching right off the open. In the morning, we get this push up to $49, and we get this hard fail back through the open, and I actually took a short position in here. As we got this quick push down to 44, I started covering a little bit of the position, and as soon as we pushed back up like that on this volume, I knew that buyers were stepping in there at that $44, and I got stopped out of the remainder of that position for break even. Very telling move here when you see that wick into that pre-market low, pre-market support area. Strong move, strong bid right back up, and that high volume behind it. That's a sign that this is probably going to go higher and squeeze those early shorts. Being patient with it, it's just sort of flirting with the opening price here, being very patient, and then we get this push up into 50. Strong volume behind that move, and it rejects that 50, and this is where I initiate my second short. Following that move, we break through VWAP, adding to my short, and we get the move through lows where I'm adding to my short again. Price pushes down into $40. Now that is a very fast move, fast 10-point move from that pre-market high, $50 psychological level, whole number rejection. And I see it holds 40, can't quite get below 40. I see this strong volume coming in, sort of a sign that it's starting to capitulate a little bit. And I'm going to be smart about that, and I'm going to take profits into this extension to the downside. If you did not catch this move, there is a trade that I absolutely love. It's very beginner friendly, and I call it the first bounce. If this is going to be a true backside short and the top is in for this overextension, which I'm feeling very confident that it is, given this multi-day move, you're going to get a first bounce followed by a new low. And the way that I like to play that is looking for the first pop into the 21 EMA on the 1 minute. We start to bounce, we start to retest that $44 area. So again, that pre-market support starting to become resistance. It's also the opening range low. We're popping up towards the 21 EMA, and I'm starting to add to my short here. If this is going to be a true backside, it should reject somewhere around here. I know I'm wrong on this trade if it starts to close above the 21 and starts to reclaim VWAP. That would be 2 strikes against me. So I'm sizing for a potential hold above VWAP on this trade. Also, similar to the last 2 trades we went over, on the 2 minute, we're also getting that first pop into the 9 EMA. First pop after a strong trend, love to see that reject like that. On the long side, love to see it hold. Tells me that there's going to be a second leg of the move. So 44 becomes resistance. We're rejecting from those EMAs. We get a hard failure. And in addition, just another solid check in favor is that volume on that up move is relatively low compared to the failure from 50, which is a pretty solid sign. Just an extra check in favor for this trade. When I get my confirmation, I start to add into this short, and my stop is just a few cents above that recent high. Looking for a break through low of day and a second leg. We get the push through low of day on volume, start to cover into the momentum, and then we break trend. We break back above the 9 EMA. Didn't get strong follow through through low of day, but at the same time, we got a pretty quick 13-point move through highs. And as we start to break that downtrend, hold back above the 9 EMA, I just leave on 20% of my position, which I get stopped out of at break even on the VWAP reclaim. So really, again, just to reiterate, A+ overextension to the upside and set up very clean. Like, this is just one of the easiest ways this type of trade can set up when it rejects from that pre-market high. Moving on to Tesla from November 14th. Following the election, you can see Tesla got overextended to the upside. We had our first red day, and the following day, which was the 13th, Tesla held inside that previous day's range. If we zoom in a little bit, you can see this very clear support developing from 324 to 323. Also interesting, after Tesla topped out, we got a close on lows, bottom 20% of the intraday range, and the following day, it held that previous day's low twice and closed below VWAP. On day 3, I'm looking for a day 3 breakdown through that 324, 323 level. Off the open, 324 supports again, pushes up, puts in a new high, and then turns back red on the day, getting below that opening price, and then we get a hold below VWAP. In addition, the market is also popping up. Let's take a look at the Qs. Market's also pushing up and starting to fail below VWAP. A little bit of a double top here in the market. I'm starting to think that Tesla could break this 324 level, but I don't want to chase weakness, so I start to initiate a position on this first pop, risk against high of day. Tesla is cleanly consolidating below VWAP, and I also like that the 9 and 21 EMA are starting to act as resistance. We get a pushback into 324, supports again. We get a final pop into the 21 EMA and a hard failure through low of day, through that 324 level, and I add to my short. Now, I'm going to be patient with this trade. We're breaking a key support level, so just to zoom out and take a look at that again. You can see this 324 holds, and now we're finally below there, and we're getting confirmation from the overall market. So we have our tailwinds in favor from the overall market. Market is trading at new lows. Now we get a break, we get a retest of 324, and a hard rejection, which is exactly what you want to see. A lot of new traders will take this opening range break to the downside, and then they'll get spooked out when they don't get that momentum right away, and it just comes back to retest. What will often happen is after an opening range break, you'll get that break and retest. You don't want to get spooked out there. You want to wait to see that reaction from that key support level, see if that support becomes resistance, and it does. I'm feeling very confident about the trade. This is an excellent spot to add, and now my risk for this entire trade is simply the high of this rejection candle, just a few cents above it. So traded right into 324, failed back down to 321.60. Stop is 324.01. We get this really nice momentum move to the downside, and at the same time, the Qs are putting in new lows. So we have those tailwinds from the overall market in our favor, which is a huge help for this trade. Tesla's ATR is roughly 16 points, and we're pretty much trading about an ATR from high of day. So I start to cover my position into this down move, and you can see that the trend starts to break. Starts to reclaim the 9 EMA, puts in a higher low and higher high, and that trade is over for me. And in addition, just a small nuance to mention is that oftentimes intraday you'll get 3 legs of a move before a bounce. And if you go back and look at the PLTR trade that we discussed, similar thing happened there. And if you go back and look at the Tesla second day continuation, same thing happened there. Interestingly enough, following this trade, we got a clean VWAP continuation set up. Now, the VWAP continuation could be a tricky trade, but the more small nuances that you have, and the more checks in favor that you have, the better the trade is. What I loved about this VWAP continuation is that, again, it's proved that it was weak in the morning. It's starting to bounce, and you can see this trend starting to form here. We have another rejection from 323, and it breaks that uptrend from the lows. And if you're a great tape reader and you can see this 323 rejecting, and you're starting to get this curl lower, you could start to initiate this position into 323 versus a hold above 324, giving it some room above 324. And you could add to your position as this downtrend breaks, and your stop is simply the recent high above VWAP. Anytime I'm trading a VWAP continuation, my first target is always a move back into lows where I'm covering 50% of the position and making the trade a free trade, and then adjusting the stop to a previous high or low, or if I really think it could go lower and I want to give it room, keeping that stop to that recent high above VWAP. All right, so we're going to wrap this up with what I would consider just an extremely easy money trade in Tesla. And these are just patterns that you could look for every day. And it's these types of base hits that I'm looking for on slower days that could really, just make your day. Just these clean, easy money patterns that should work right away. So let's dive into one. And this was actually the trade of the day for me. Just an extremely simple, easy money trade from November 18th, which was a Monday. If you look at Tesla, we talked about the continuation setup after the election on day 2. We talked about the day 3 breakdown, And on Monday, the 18th, there was news over the weekend that the Trump administration will prioritize self-driving development. And this created a pretty straightforward opportunity when Tesla failed to hold VWAP into the afternoon. So let's take a look at that. So Trump going to prioritize full self-driving. We know the relationship with Musk. Zooming in, we have this strong gap up on Monday. We have a pre-market high, 349.50. Pretty clear pre-market support area around 335. You can see held there in the pre-market, acted as resistance, held there again before it really started to push up at 4 a.m. and off the open held that 335 again. I don't want to dive into every trade on this, just the trade that I made the most money on this day. There were excellent opportunities to the long side after it held 335, even after it was able to hold 340 and break this sort of W pattern that we have here to the upside. There was a nice VWAP continuation, but what I want to talk about is this wedge breakdown around 140 in the afternoon. The catalyst seems very bullish, but once Tesla breaks out of this opening range to the upside, the momentum just really isn't there, and it can't even test that pre-market high at 349.50. And just to reiterate, Tesla's had a big run, it's had a pullback, and now we're gapping up on this catalyst, which, bigger picture, it's an excellent catalyst. But just putting the pieces of the puzzle together intraday that can't quite test that pre-market high. Each new high that it makes sort of fails to follow through with big momentum. So you can see Tesla puts in a new high, it slows down, gets below that previous high. Puts in a new high, no big momentum to the upside, fails again. Tries to take out that high, which, if Tesla was going to be really strong this day, it should effortlessly test that pre-market high, and it just can't. And it starts to roll over, and it starts to hold below VWAP. What's actually interesting is that Tesla is relatively weak on this day in comparison to the overall market. So we could just take a look at QQQ quick. QQQ is just pushing higher, making new highs effortlessly. It does pull back, but it's holding well above VWAP. While the Qs are holding above VWAP, Tesla's holding well below. We get this hard failure from VWAP, which turns into almost a 1 hour consolidation. And this wedge forms. So before I draw the wedge, I just want to point out that we're looking at a 2 minute here. We get this failure. The low is 337.80. And Tesla pops up to the 9 EMA, it fails, and then the 21 EMA is acting as resistance. I'm looking to take a breakdown of this wedge. And if this is going to be a solid, easy money, intraday wedge breakdown, once it breaks that 337.80, the low of this wedge, it should just go right away. Tesla's starting to break below the wedge. You can see some volume come in there, and then we break that 337.80. And I'm simply staring at the bid side on my level 2, and as soon as that drops, I'm going to hit it short. And if this is going to be a solid wedge breakdown, it should follow through right away, and it does into low of day, where I take a majority of this trade off. I'm watching how it responds to low of day. It breaks to new lows, and it starts to hold that 335. Really just clean, like 3-point move from that wedge breakdown. Just an extremely easy money trade to take advantage of. Just a really solid, really base hit, but it was a little bit more than a base hit. One check in favor to point out here is at the same time we had the tailwinds from the overall market in our favor. As soon as Tesla broke that wedge, we had the tailwinds from the NASDAQ also in favor of that trade. So we had the overall market moving lower for that short amount of time as well, which is something a new trader would overlook, but it is quite helpful. All right, thanks for tuning in to another Bar by Bar.
So you're an active trader. not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.